Why have the FDIC not acted already? And what happens now at SVB?
Yeah, so this is a pretty standard process. And if you even go back to '08, you'll find that Thursday nights are really important nights for the FDIC and weekends. Because what they do is they go in, and there's a whole series of outcomes that the FDIC can pursue. But they go in and take over a bank on a weekend. And they do that very purposefully so that they have a moment when there's not a constant pull on deposits, and they're able to do the work to assess what is in there in a balance sheet. And so that work typically happens on a weekend. And so what happens in a bank failure is as follows. So first of all, you're right, it is the FDIC. They take over a bank, they resolve it. They are the ultimate resolution authority, even despite a bank being regulated by a different regulator. Other than credit unions, they are the institution whose job it is to go in and resolve how to manage bank deposits, and then how to therefore resolve the issues with all the assets. They send their team in. They actually send people in. They work part and parcel with bank employees to do their job. So in the case of SVB, for example, the team at SVB has signed 4-week contracts with the FDIC so that they're now being employed by the FDIC, and they are doing the work to be able to pull data in the systems, be able to count up deposits, so that they could be prepared before a Monday morning opening to announce what their plan is on how they are going to release cash to depositors. So there's actually an order of repayment. It's the FHLB, then they pay admin expenses, then they pay out insured deposits up to $250,000 per account. So if it's a consumer couple, they get $500,000. And then they're able to go through this process of disposing of the assets minus the liabilities that they're able to pay off. So that is the waterfall of funds. So they come in and they basically do the analysis of what they find, and then they are not an investor. They immediately start selling. And so I would not be surprised if on Friday they weren't sitting in there making massive sales so that they could do what's called an advance dividend. So in addition to the depository amount of $250,000 per account, they have the ability to do this advanced dividend. They go in, they calculate what they think is super liquid, immediately sold, right? And then they can make a judgment about how much they're going to release above the 250. And so that is the number that I think people are waiting to see on Monday. Is it 50%, has been speculated all across Twitter? Is it more or less? And that way, at least, they can try to make depositors immediately liquid so that they can gain access to their accounts at a level greater than SVB. So SVB also was uniquely concentrated in terms of larger deposits. I think only 2% of their depositors were below the $250,000 amount per account. The rest were above. And so you could see that the 250 doesn't really get you very far. And they will go in and try to release as much funds as they can that's immediately liquid. And then they will go in and start to go through this process to mark things to market and do the dispositions. Kris should take it from here because she is the person who's done the biggest one ever in American history and has spent 10 years working on that.
With a team of incredibly talented people at Lehman. So it's a long process to get, if it goes that path, if there isn't another buyer that steps in, and we could talk about that, or I'll let Jackie talk about that in a moment. If there isn't another larger bank that can step in and buy SVB, or at least buy parts of SVB, the liquidation process can be extensive. Lehman filed for bankruptcy in September of 2008. Here we sit in March of 2023. It's not done. They've distributed almost $130 billion. There's still multiple 9 figures, and last estimate, still multiple 9 figures to be distributed. So that is what I would call an extreme case, and one that's likely not in SVB's depositors' future. But that's how long it could take to wind it all down. Now, if a quick look at SVB's balance sheet as of year end, if you take the market value of their investment portfolio, both the AFS securities and the held for maturity securities, plus their loan portfolio, which should be saleable, it's more than their deposits. So there should be enough to cover most of their deposits, and ultimately over time, but it just may take some time.
So can I ask, sorry, I'm deliberately asking kind of very base questions, but I think also what a lot of founders are thinking is, I'm the founder of a company in whatever space. I have no idea what all of this means. So I'm going to get $250K back on Monday, and then I get 50% back hopefully next week. And then what happens?
And then as the FDIC, as the primary liquidator of the bank, goes through and actually liquidates all of the assets, primarily being the investment portfolio and their $75-ish billion loan portfolio, then they can actually go through and make additional payments. And one would like to think, since their investment portfolio as a regulated bank is pretty conservative, those investments should be relatively easy to sell. So it should not be anywhere near as extensive a time period as it was for Lehman, which had far more complex assets.
I know it's impossible to say. I'm just wondering, is it like 6 months? Is it like 3 years? 5 years? Like,
again, the assets are pretty straightforward. What you don't want to have happen is anybody come in knowing that these things need to be sort of fire sailed off. You don't want anybody to pick it off at a low rate, so they have to make sure they sell it to maximize the value back. Right. But it shouldn't be an incredibly extensive process at the likes of Lehman.
But they are going through a sale. Yeah, like that is their job. Their job is not to sit there and say, wait, if I held it for another month, maybe I could get a better buyer. Immediate sale. So there are actually, the best outcome that would happen is if someone were to come in and take over the deposits, or quote, buy the company, right? Buying the company is buying whatever's left. And so you could have a buyer or a group of buyers who come in and immediately take over the deposits to do a continuation of operation. That would be the best outcome. And frankly, given the quality of Lehman, given the quality of SVB's client base, you can absolutely see a situation where buyers like Morgan Stanley, PNC, JP Morgan, Goldman Sachs would really want to have the client base of Silicon Valley Bank. And you are seeing some messages go out on Twitter that are trying to instill that confidence in a buyer, such that venture capital firms and companies are publicly stating, we will stick with SVB if there is a buyer. We want to work with SVB. They've been a partner to us. We will be a partner to them. And so you actually are seeing that very purposefully as a message to a buyer, because a buyer has to pay that deposit. And what happens is, though, the amount above the insured amount and the total amount of the deposit base, unless it is funded with the liquid assets by what's available there, that's the liability hole that could be left in a typical scenario. And that liability hole is what the buyer has to assume. Now, as Kris said, given the asset base that's there, you would assume that the deposits actually have the capital to fund the 100% of the deposit base. But I'm describing the alternative scenario if the money is not significant enough to support the entire deposit base.
And I would add to that at least in most bankruptcies, and using Lehman as an example, if there is going to be a protracted liquidation process and folks are given receivership certificates that they have to wait to get their dividends and wait to be made whole, at least in the case of Lehman, very quickly after the filing, a market sprung up, a very efficient market sprung up to trade those claims in the bankruptcy case. And I would imagine a similar thing would happen here.